Good morning. Good morning. It is Wednesday, April 26th, 6 o'clock in the morning. It's only 92 degrees where I'm at. And we got it. We got our very first minus 1%. We actually got our minus 1% after 20 trading sessions, warning about it for more than 2 weeks as a highlight. It finally arrived yesterday. And I'll actually show you, bring it here into the chat. Obviously, little tiny gap down, fractional. It was right at 9:30 in the morning. Secretary Yellen says economic and financial catastrophe would come from Congress not raising the debt ceiling. That's how we started the day. Now, everybody that had been reporting, McDonald's, General Motors, FRC, UPS, everybody was down. Everybody was selling off, whether they beat or they didn't beat. The VIX started to fill the gap fill. Had the SPX gap just up above, and we were just hanging around, not doing much early in the morning. Consumer confidence, better than or worse than expected, meaning no rate cuts. We got our little bounce there in the morning. Then we came down to the 20-day moving average, and at 10 o'clock in the morning, we started talking about it, where the minus 1% is. You got VIX 1811, then the QQQ, big, massive, 1 month long 313.13. And we started getting oversold at 10 o'clock in the morning. Come down to where it all started here, was here at 12 o'clock. The White House said if House Speaker McCarthy's debt bill is presented to Biden, he will veto it.
I'm prepared to say that I have a record of over 40 years and that I'm going to beat Joe Biden.
Yeah. So what we wound up with there was our very first minus 1%. And we actually closed below 1%. And in between, right when all that was taking place, First Republic got halted. And we had another SIVB. Back over here in March 9th is when that happened. We were already trading decent volatility. And 2 days later, we were down 200 points. 200 points. We went from 40.17 down to 38.08. That 38.08 was where we hit our big bottom, and that was our full moon at the same time there on March 13th. Now, I want to bring you into a couple of things here. What I have shaded out here in white are prior multiple session runs that we have had over the past 2 years without minus 1% declines. And what I see going back, other than this very obvious October, November, which was extremely bullish, it was 24 sessions, we had a 2-day blip. That was it. Over here in August, you remember me mentioning, we had 7 days, and then we had 1 day where we came down and visited it. We didn't close below it, but we visited it. And then we had another 7 days, and that was where we hit our August top. So coming over here, we did it again right when we went into the all-time highs. We had it over here in late November, September, all the way through. What I'm seeing and what I'm finding is that we tend to get a series over a course of a couple of sessions, 4 or 5 sessions, of multiple minus 1% visits. So I am not confident that we are going to be heading upward, and in fact, starting to look a lot more clear that we are going to be selling off earnings. You've got these massive run-ups and a horrible look right now over on the futures. And we're going to be selling off into the FOMC meeting. Now, this is a zoomed in version that I'm looking at here of this wave down that we're looking at. So we've got a clear 1-2. This is all the way down to the 161.8 extension perfectly, right to the 38.2 retracement from that 39.09, not the 38.08. And here's your 23.6 from the 38.08. Now down here at 38, or down here at 40.30, which fills just one of the gaps, We've got our 50-day moving average. We've got that 4031 for the 250 extension, which I've seen all throughout the course of 2022 being where the bottom tends to target to, somewhere between the 200 extension and the 250 extension. And you've also got your 38.2 retracement down to that 38.08. Now, I'll zoom out a little bit. Nope, not getting it all. So let me just change it so that you can see clearly what I'm discussing here. I know I can get it if I go to March 6th, even though I don't know the date. There it is. So this is what we've been looking at here. From that 38.08, looking at a 1, 2, 3, 4, and this was our 1. Come down, here was our 2. It's either our A or it's our B. And then we start progressing upward. We definitely got a clear 3 over here at the end of March with all those gap ups. Got our little 4, and we were looking at our 5. This is what all of us had been looking at for weeks and weeks and weeks, and we haven't been anywhere for all of those weeks. Now we finally got to move to the downside. So on a wider view, what we're looking at here is a 1, 2, 3, and this being the 4, as long as this 4 holds. If this 4 fails, and this is just wave 1 that we're working on to the downside, and we get a bounce to the upside, which we will be able to look at as we get closer to it, then we are going down to that 38.08 like we were expecting to. And it's just a question of, when do we do it? Do we do it now? Do we do it later? But that's what we're working with right there. So, the upside view, it's still very clear, but for going back decades and decades, or it sounds like decades, months and months and months, that 41.55, that's your limit. And I still am very concerned that this is the limit for the upside move for the bear B. I'm still a little bit concerned, but I've got upside targets still. And here, I've actually got it right there. On that downward move down in February, you had your 1, 2. Here was your A, there was your B, and your C bottomed out right at the 261 extension. You had your 200 extension off of that BC. So, we're working with what we've got in order to function ahead as to what we're going to be expecting. The VIX, get up here into the 19s. We haven't been in the 20s since this whole drop began. So we get any kind of move back up above this and into that 2102, it's lights out. The bears have got full control to run down to that 3930, 3900, 3850 area. So one day doesn't change, everything. However, here's your Microsoft. And I'm looking at the daily, and I'm looking at how extremely oversold the daily got. Now, we're just talking about oversold. We're not talking about, in fact, perfect opportunity right here. You can see over here how you were extremely oversold as you were going in here into September. And here's your September right there where you were oversold. Then you got your bounce, and then you got your further decline. And we're looking over here on the daily. And as you can see here on the daily, you have a clear and powerful buy divergence on this pop right here, and an even stronger one when you posted that low over here in October. So all we're looking at over here is being oversold, very similar to what we had over here at the beginning of January where it dropped down. Oversold, it's a warning. Once we start seeing this buy divergence, it's a lot more powerful, as you can tell, the move that you've had to the upside. 213 to 300. It's a 50% move over the course of 6 months. Come over here onto Google, and we're looking at pretty much a little bit less of a bullish setup with Google, how this daily continues to want to go lower. You're about to get a bullish crossover with the 50 and 200, but the move that you've already had up there over the overnight is gone. It's all gone. All of that move up and down is back over here at 104.70, closed at 103.85, completely gone. So what we've got coming today is Meta. And on Meta, here's what we've got. Oversold, as you were oversold here back in November. Same thing with October, and you've got your buy divergence. But This thing is absolutely disgusting. You're trading at the 400-day moving average. The 50-day moving average is climbing up. You have multiple gaps that need to be filled. From here's last earnings that still needs to be filled down here at 154. Your 200-day down below that. You came right to the pre-COVID highs, right to your major resistance line. Bring you out here as to where we are trading with Meta. And here's your high from back over here in July of 2018, which I clearly remember was on earnings, and they shit the bed after that. Here was your COVID highs over here, and you shit the bed after that on COVID. And here we are right now resisting this same area. So I am not bullish on Meta as they report today. I'm still holding June 16, 175 puts that I bought way, way early, about a month and a half ago. But I'm still having a little bit of confidence in this as to how it looks, because when I look over here on the weekly, I can see on the weekly RSI there's a lot of move to the downside. So going back to where we are, yesterday we dropped. April is still trading in a 100-point range. 40.6984 was our low on April 6th. We came down to 40.71 yesterday, and then Ken Griffey Jr. showed up.
Fly ball into deep left center field. Griffey going back to the 1-8 track, leaps high in the air, and he's got it! An incredible catch by the kid! He takes away a home run from Jesse Barfield, climbing the wall in left center field in Death Valley here at Yankee Stadium.
Look at Barfield, he's stunned. He's standing there with his hands on his head. I don't believe it. Are you kidding me?
And we closed pennies above the low of the day. But again, from this being only a 100-point range, I am still very, very biased, as I have been, that we are going to be heading down into this lower 38, 3850, 3900 area as we progress. We only got 3 days left for the rest of the month, but we got the FOMC meeting coming up next week. So I'm looking for it to be down here as we go into that, or from it, or after it. But yeah, May 5th. So anyway, sorry, rambled a little bit too long. Have a great morning, and I'll catch you in the chat room.